Hi, and welcome to our global webinar series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is every day the same, quick and smart. So let's have a nice start like every day. And today it's Tuesday, 15th of January, 2019. Before we start, of course, a short look to our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to the complex nature. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long version there. If you're in the European Union and you still like to see and read more about the topic of the year 2018, maybe still from 2019, the different offers and options for retail clients, professional clients due to regulation, you will also find information there on our web pages. A picture shows more than 1,000 words. 2 prominent examples, DAX 30 and euro dollar. The margin requirements could be quite different if you're a retail client or a professional client. If you're a professional trader and you like to get the professional client status, if you're eligible, you can apply for it online. Here you see the specific link. Retail clients still have a big benefit. It's called unlimited protection against negative balances, what's not given for professional clients by regulation. But some brokers and of course also Admiral Markets offer something additional. It's called negative balance protection policy. Via that, up to 30,000 British pounds, according to our policy, you get a protection even as a professional client. Details and all more about it online. Just visit our webpage. This is me. My name is Jens, my English, made in Germany. So I'm the German guy from Admiral Markets, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. Like today, on Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. Thursday, it's Marcus' day. On Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, 0.8 points typical spread for DAX 30 or 0.6 pips typical spread euro dollar. Check all that out on admiralmarkets.com. Also online you will find some information about our global offer. We have an office in Chile, we have offices in the European Union, and of course also an office in Australia. One world, global offers. Yes, the choice is yours. If you'd like to read and learn more about it, just visit our webpage. Enough from my side. Now it's time for Paul. And before Paul, take a look to the markets. Today it's a hot market event. Maybe the UK Parliament will make an election, or maybe Paul can explain it better like me. So everything is possible today on the markets. That's why for professional traders we change our margin requirements today. All professional traders get information by us, by email, by company news. And yeah, maybe more about this hot market event by Paul. Good morning, good day, Paul. What's your view to the markets today?
Good morning. Good morning, Jens. Good morning, everybody. Thank you for the introduction, Jens. Here we are. It's Tuesday, 15th of January. And yes, as Jens rightly said, we have a hot market event here in the UK today. And I'll come back and touch on that in a moment, and that will probably be the focus of our session today. But you know, there's a few things coming up for traders. I appreciate that we have a global audience here joining us, and so who trade a wide range of instruments here with Admiral Markets. So there's an awful lot of opportunity abounds. And what we have is today we've got Mr. Draghi speaking later on today. Tomorrow we have Mr. Carney speaking, and of course after today's event, everyone will be interested to hear what he has to say. We also have CPI, and it's a bit of a week for CPI this week. But tomorrow we'll have US retail sales to be aware of. Thursday we'll have Mr. Kuroda speaking, and also once again Japanese CPI. And then on Friday we've got Canadian CPI and also the sort of US dollar University of Michigan sentiment. So lots of CPI coming out, lots of good high level sort of news coming out. But the reality is that this week and especially today is going to be driven by the hot event in the UK, which is effectively the UK Parliament's vote regarding Mrs. May's withdrawal agreement, her Brexit deal, and whether it will be passed through Parliament. And that vote will be going on this evening between about 7 and 9 o'clock this evening. But of course, all day, and if you've been watching the news and listening to the sort of squawk boxes and wires, not surprisingly, there has been lots of tidbits and bits of gossip and rumor coming out, and of course that has an impact upon markets. So, with that big hot event in the UK, which we'll touch on a little bit more as we talk about it, it only makes it's prudent for us to have a look at sterling and the FTSE in general. So I'm hoping you can all see my charts here. This is the Admiral Markets MT4 platform. What I have here is a profile set up for British pound, and what I've got here is effectively a British pound against the majority of the other majors. So here on the top left, I have pound against dollar. Second across, I have euro against sterling, pound against Canadian dollar, pound against Australian dollar. On the bottom, I have pound against Japanese yen, pound against Swiss franc, pound against New Zealand dollar, and the FTSE here in the bottom right. So at one glance, I get a chance to take a real quick look at the sort of the relative strength or weakness of the sterling against the other major currencies. Not surprisingly, over the last month or two, you can see yourself that invariably, sterling has been pretty much weak as the sort of shenanigans go on regarding, this Brexit deal and what will happen as we sort of lumber towards the 29th of March. What I've got here is, these are weekly charts, okay? And if I appreciate we have a broad range of experience in the room, so we have some people who are new traders. So for those of you completely new to trading, my charts are kept pretty simple. I'll have green bullish, red bearish candles. I'll have a blue 20 simple moving average, a red 50 simple moving average, a green 200 moving average. Then I will draw in, I'll have fractals on there, and I'll also sort of draw in horizontal levels of support resistance and any particular sort of trend lines or patterns that I note. But if we look here on the weekly chart, as I said, this is just a glance, and interestingly on a weekly chart is that I personally I see quite a lot of we've seen kind of a lot of either double bottoms or double tops occurring on the weekly chart in sterling. What we've had is the last couple of weeks is having had sort of if we just take pound against dollar as one example, after kind of weeks and weeks and weeks of sort of sell off of sterling, we've had actually a little bit of a rally, okay, over the last week 10 days. If we look at euro sterling, because that's a little bit different, what we actually have is we've actually had just a little bit of a fall away, and I talked about this about 2 weeks ago that or last week that we had a really nice big sort of weekly key reversal candle, engulfing candle there, okay, that was up and around about this 90 to 90.50 area, which those of you who've joined us over the last year, I've talked about that area being a significant area of resistance, and once again price got up and it fell away. But if we look at pound against dollar, okay, and we'll just zoom in once again after having had the sort of the fall down there to around about that kind of 125 zone. Well, actually we've had just a little bit of a rally, and why would that be? Well, I think part of it we have to look at what is the what are the outcomes for today, and how could that actually have an impact upon the markets. Remember, markets are generally a sort of a future discounting mechanism, so they're already pricing in what they think is going to happen. And generally, as a rule, pretty much most people think that Mrs. May will lose this vote later on today. It was the vote she should have done back in December, and she pulled it 24 hours beforehand. Excuse me, she pulled it 24 hours beforehand because she just realised that she was going to get absolutely decimated in Parliament. She's brought that vote back to Parliament, but not really that much has changed. We had she had made a statement yesterday afternoon saying that she had a letter from the EU saying that the Irish backstop was something that they didn't particularly wish to sort of work with in terms of sort of make it a permanent thing. They'd be looking at using it as a temporary solution, and I think she hoped that would buy her some votes, but we shall wait to see how that occurs later on today. So I look at this as kind of three sort of possible scenarios, okay, and how that will affect sterling, and that is how as traders we can position ourselves. I think trying to trade sterling today during the day up to the hot event is a rather would be a rather challenging outcome, because I think, as I said, we're going to have gossip and rumours, okay, constantly flying out as people try and position themselves beforehand, and that will have an impact on volatility within the market. So I think, you know, trading sterling up to the news event would be rather challenging, and not something that I'll be doing myself. But, you know, after the event, we will see, you know, how the market reacts. That's why, you know, I'm always not really too fussed about, you know, what the news is, but I'm always keen to see how the market reacts, because I'm a trader, and that's where my opportunity comes, seeing how the market reacts after a news event. So, you know, I look at it as, you know, kind of three possible scenarios. Three possible scenarios. The first one is that Theresa May could actually win. All right, she could have done enough sort of, let's say, work in the background to sort of, you know, convince some MPs to change their mind and actually to vote for her deal. I think that's an unlikely outcome, but it is a possible outcome. Okay, and if that were to happen, then I think what we'd see is, I think we'd see sterling rocket. Okay, I think we'd actually see sterling rocket, and that's, you know, if we got that vote, and we'll get the results, you know, sort of this evening, you know, I would be actually, you know, waiting to see sort of sterling rocket off the back of that. The second one is that Mrs. May, you know, Mrs. May's vote, she loses it by a narrow margin. Okay, now of course, you know, we could all sort of spend some time defining what a narrow margin actually means. But actually, you know, if she loses by a relatively narrow margin, well then, you know, I still think actually that sterling will perhaps drift higher, because I think what she will do is she will go away, she will try and see what she can do, and then bring the vote back to Parliament. I think that's what will happen. I personally think that's what will happen. And so, if that was to happen, well then, you know, I think we'd see sterling drift, you know, a little bit higher off the back of that. The third option is that, well, you know, Mrs. May loses, and she loses by a very, very wide margin. Okay, she loses by, you know, we're talking, you know, about a triple figure loss. Okay, in terms of her vote being defeated. In which case, then, you know, I think that you know, all the bets are off for sterling, and I actually think that we'll see you know, a major sell-off in sterling. Okay, I think that you know, that she will effectively be seen as a little bit of a lame duck prime minister. Okay, you know, it's the kind of it would be the kind of defeat makes it very, very hard for a prime minister, you know, or any kind of, you know, country leader to come back from. Makes it very, very hard for them, and it makes it very hard for her to sort of have any particular credibility. And so there will invariably be a sterling sell-off, you know, off that, because then that sort of adds into uncertainty, adds into, you know, will she stay in her job? There are, of course, and I say, you know, we are on a day of rumours. You know, there are rumours, you know, flying around the scorebook that, you know, if she does lose by a good margin, that invariably Jeremy Corbyn, okay, the leader of the opposition, and the head of the Labour Party will be, they'll be sort of putting in their vote of no confidence in Theresa May and her government. And that in itself will, you know, will bring in uncertainty. You know, Mr. Corbyn, he wants, you know, he wants a general election, okay, and I think that you know, if that general election doesn't, if he doesn't get that, well, or if he does get that, I think that will actually add in a great deal of uncertainty and a little bit of a definite weakness to the sterling. So you know, what I'd be saying to traders is, you know, just, you're going to have to sort of wait and see how the result comes out there. Okay, if she wins, expect sterling to rocket in the unlikely event that she wins. There's a, you know, a loss by a narrow margin. Well, then, you know, we might see sterling drift higher. But if, you know, May loses by a wide margin, okay, and then, you know, the outcome of that, if she resigns, which I personally can't see her doing. I think she's enjoying the power too much, and I think also that you know, if there is vote of no confidence, or if there's a push for second referendums or further elections or general election, okay, then I think that will be a sell-off in sterling, and so I'd be prepared and ready for that. So, you know, hopefully that gives you a little bit of an idea to sort of how to set up for, you know, for the sterling, you know, event, for the GBP event today. But I appreciate there's also, as I said, we've got a global audience, so that's the big event, but we've got a few other things going on. So let's have, for the last few minutes, let's have a little bit of a look at some of the other opportunities that are you know, are playing away. Invariably, of course, we've got things like Eurodollar and DAX are, you know, very, very popular trading instruments for you know, for Admiral Markets clients. So let's have a little look at the DAX and see what we can see here in terms of trade opportunities. You know, I talked here, I think about a week or so ago, that, you know, I thought, you know, we were looking as if we were just, you know, knocking about between a range between about 10,400 and 10,800, and that, so long as it remained within that range, okay, then I'd be looking to trade within that. But actually, we got a little bit of a bust out of it the last few days, okay? And now we're looking at a range between about 10,800 and just under 11,000, about sort of 10,990, etc. I'm kind of curious to see here on the daily chart whether whether we could drop down to sort of that daily 20, and would that then be sort of creating ourselves as sort of an inverse head and shoulders, which would be kind of interesting on the DAX, because there's sort of the news coming out of Germany at the moment, with regards to the economy has been very, very poor. Some of the I think Bank of America Merrill Lynch, they're already saying that Germany's in a technical recession, and other major economists are expecting Germany to sort of transition towards that over the next few months, based upon what we see happening. So it'd be interesting to see maybe a bigger picture DAX bullish picture come when let's say the news is rather negative. But ultimately we're traders. We trade what we see. And what I'm looking at is if I go down to the 4-hour chart, what I'm interested to see this morning here is that as I said, we didn't hold that 10,800. We busted it, and then we've basically been in a nice little congestion zone there, okay, for most of the last week. And what we saw this morning was, this is a really nice, okay, bearish engulfing candle. It's a bearish key reversal candle. We pushed to new highs, but then have closed beneath the low of the previous candle. And so, I'm kind of rather bearish on this, okay. And so, I've been just looking here to have a bit of a swing trade here, okay, a bit of a swing trade on the DAX. So I'm looking to get short there at around about the sort of a kind of 10,930, 10,935 zone. Okay, I'm looking to be a short trader there. Okay, my stop is going to be above that. The stop is above, up to around about 11,000. I'm just going to put it just north of 11,000, about 11,005. Okay, that just gives us a little bit of a buffer for people trying to trade up towards the big round number. And then what I'd be looking, as I said, is to be short. And ultimately, I'd like to see us maybe sort of back down, trading down back towards this kind of sort of down towards the sort of the other end of that block that we saw. Okay, in an ideal world, we'd be looking at around about 10,500 as a target. But remember what we were just talking about with regards to that, that daily 20 and such. And so, kind of a more natural target would be around about here, around about the sort of 10,650 area. That's what I'd be looking for, which would give us the kind of right shoulder here on this inverse head and shoulder that we've seen forming here. Okay, so around about that, around about that 10,650 would be, my the sort of the target I'd be looking for. Okay, and if we see, strong selling, well then, I'd be interested in running it down to, down towards around about that 10,500 area. But I think that, on a bigger picture, we might get a drift down towards there. Okay, form a right shoulder. And then that might be the bullish opportunity. But as our trade at the moment, I'd be looking at, as I say, short around about 10,930, 10,935, stop at 11,005. Okay, trading down towards around about the 10,650. That's going to give you around about a 3-to-1 reward to risk on your trades. Okay, that's always a nice risk to reward ratio, and that that will give us something to watch and look at over the next few hours and days. Let's have a quick look at one or two other sort of interesting things just to finish up. I thought we'd have a little look at something a bit different. Have a look at oil, the WTI. Okay, West Texas. So we had a great sell-off. Okay, fantastic sell-off. We talked about here. I talked about it a few weeks back about how it was reacting at 200. We continue that fall down to 4,200, which was our lows. Back down in 2017. But we've had a little bit of a rally back up to that sort of that weekly 200, and as I go to the daily chart, okay, we rallied up there and we hit this really quite nice. This is a sort of a bearish engulfing candle, okay, bearish momentum reversal candle, and once again, I'm interested to see, are we going to get a drift down to around about the 50 zone? Okay, 50 would be the big round number, and I'd be interested to see, can we drift down there? Okay, and this is one to add to your watch list. And then once again, if we do, okay, is that then creating an inverse head and shoulders there, okay, on the daily chart of West Texas? So keep an eye on that. That's one to add to your watch list there. Have a little look at gold. We talked about it last week, I think. So gold, here we go, weekly chart. We've rallied up beautifully, okay, up towards that 1,300 area. We talked about this last week that I kind of would see that as a sort of an area of supply. And we talked about, if I talked about, here's the daily chart. We're just coiling up there. That's what I see us doing there. We're coiling up just underneath the 1300 area. Last week we talked about, we had like a bit of a 1, 2, 3, and I was talking about if would the 4-hour 50 hold. If it didn't hold, then I'd be trying to sell it to give me a sell opportunity all the way down. If it held, well, we'd just be seeing it come back up and sort of trade out through this block. And what we can see is, we got down to there, but it couldn't make any convincing move. We actually got a double bottom there, a nice sort of bullish engulfing before rallying back up. And now what I see on this 4-hour chart, ladies and gentlemen, is, I see this as, once again, this is coiling up here, okay? This is getting ready to sort of make a move, okay? We're just under the 1300 level and we're coiling up now. Normal sort of technical analysis, classical technical analysis would be that this is, it's a sort of a triangle in an uptrend. The triangle is a continuation pattern, so that we touched upon on the Mastering the 4Ms of Trading webinar. So you would be expecting this to basically to sort of, to blow north and actually sort of move upwards, okay, and continue its move north. I think that kind of 1300 level might put the brakes on that. So, for me personally, I'm just waiting to see how this coil sort of takes on itself. Okay, how do we look to see this this coil work? And and as I say, if it breaks out to the north and can get above 1300, I think that is very, very bullish. But on the flip side, if it breaks to the south side, well then I'd be looking to sort of short that down to around about that 1260 level. That would be a nice long trade on there, having had that nice run up. So there you go, Jens. It's I think we've got a little bit of time. I'll take a question if there's 1 or 2 remaining. Otherwise, I wish you the very best of success for your trading today, ladies and gentlemen.
I guess we are done for today. Again, a hot market event maybe today, so be careful about your trading activities. And the next webinar will be tomorrow. So same time, same place. If you'd like to see and watch us again, just join us every day to the same time. And if you'd like to see that again in a couple of hours, it will be available in our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. Thanks to Paul. Greetings from Berlin office. Bye-bye.